Roku shares are rallying in pre-market trading following a Business Insider story which says employees inside Roku have been speculating about the idea of a possible acquisition by Netflix. Now, people familiar with the matter say internal chatter within Roku has heated up after the streaming device maker abruptly closed the stock trading window for all employees, and that prevented them from selling any of their vested shares at a time when they normally might be inclined to do so. Let's get reaction from Rich Greenfield from Lightshed Partners. It would be interesting. It would be kind of a big concession from Netflix that maybe they need. I don't know. They need help. They can't. Their content creativity has dried up, so they're going to try to move into this area. But you don't think so?
Joe, I think this is one of the more absurd things I've ever heard in 27 years following media stocks. Honestly, think about what Roku is. Roku is a platform, TV operating system that is built into devices and dongles as well, little sticks that you plug into TVs. And everybody wants to run on top of that TV operating system, whether it's Disney Plus or whether it's Netflix. But getting into that, actually owning the business, Netflix owning hardware and basically prioritizing one hardware, meaning themselves, over the thousands of devices that Netflix runs on, seems completely antithetical to the everything that Reed Hastings and Ted Sarandos have built over the last 20 years. So it's very hard to understand. Not to mention, Joe, as you know, Netflix's core business is not advertising, will never be advertising. Will a portion of the business now become advertising? 20%, maybe 25%. Anything is possible as they embark on adding an advertising tier. But remember, the core Netflix subscription is staying. They're going to add a lower price advertising tier to the subscription, the ad-free subscription tiers. And so it's always going to be a smaller portion of the business. And so to spend $20 billion, let's just say, to buy Roku, to make advertising this huge piece of the company would seem very, very out of character.
Why spend 20 when you could spend 100? I mean, would you be surprised why Roku employees might be drumming up some interest?
Look, Joe, it doesn't surprise me at all. If I'm a Roku employee, this first of all, this speculation has been kicking around for weeks, if not, basically since Netflix announced advertising. I think Roku employees have wanted this to happen. The reality is, think about what's happened to Roku. They're facing a lot more competition. I mean, your parent company, Comcast, just recently announced a joint venture with Charter where they're doing tvOS. Samsung is getting more aggressive. Google, if you walk into a Best Buy now, you see a much bigger presence of Google TV. The tvOS wars have really heated up over the last 12 months. That's putting pressure on Roku. We're also going into an advertising recession, or in recession economically, which is going to pressure advertising, but that's also hurt Roku stock. But the real pressure has been competition for tvOS is heating up. That's exactly, if I'm Netflix, I'm benefiting from these TV operating system wars. I don't want to move. You've already got the streaming wars that you and I and your team have talked about for years that Netflix has been competing in. You're going to add a tvOS war on top of the streaming wars? That just, honestly, it sounds crazy.
So is Roku, you think, going to go eventually the way of like TiVo?
Look, Roku is a market leader in TV operating system. I think Anthony Wood has done an incredible job of getting out in front with software that's easy to use. The difference is, Becky, Brandon Ross, my partner at Lightshed, we would go to CES every year. We would walk the show floor and we would walk up to a Samsung TV or to an LG TV. And the two of us would literally laugh at each other because the software on the TV was so pathetic. Roku was so much better and so much easier for the average person to use. The challenge now is if you walk into a Best Buy, let alone CES if you went there, but if you walk in and look at TVs, they all kind of look pretty much similar now. Like they all sort of do the same thing. The operating systems all sort of work equally. Like the advantage.
I love Roku. I love Roku. We use it at home, but look, if you can get it easily elsewhere, if you don't have a moat anymore, I think that's the point. If you don't have a moat,
which is why they're creating content now. It's why at the beginning of the year, it's why we said they should buy Vizio to build their industry market share. So I don't think they go away like the way TiVo goes away, but I do think their market share shrinks. And I think that's sort of inevitable, that the competition in this TV operating system is just going to get more and more intense, because you've got huge players, Amazon, Google, Comcast, Charter, you've got Vizio, Samsung. Like, you've just got a lot of players out there that I think make this that much more difficult. And it's why they're going and creating content. I mean, Roku is going to spend a tremendous amount on content over the next 12 months because they see the opportunity to, create advertising inventory, but on top of that, to try to differentiate the Roku brand.